What's up, Austin?
What's up, brother? What's
Hey,
up?
everybody. Hope y'all are well. Austin and I are doing another Zoom video.
Just for you, our
Exactly.
referral partners. This is all for y'all.
Yeah, we're trying to stay out there, trying to get y'all some great information. And today's video that Austin and I want to shoot is we keep getting this question from a lot of clients, a lot of borrowers, even from some of our referral partners, is now the right time to buy? And so we kind of want to put a video out there to kind of answer that. Austin, how have we been approaching that question?
Yeah, it's been coming up a lot lately, like you said. And so I know if we're hearing it, that all of you out there, our referral partners, you guys are dealing with this. And what we've said is that when it comes to whether or not now is the time to buy or whether or not now is the time to buy that house, that's not our expertise. That's y'all's. But what we can tell you is that now is absolutely the time to finance. Rates are still down at the lowest levels in U.S. history. And what we know is that they're not going to get any better. Like the investors have said, this is it. Like they're applying a lot of resistance. Rates are not going to get better. So now is the best time to finance a house, period. But one of the things that I think has been really helpful, Jonathan, is what you've been saying lately about what are the economic triggers that move us from not just a seller's market to a buyer's market, but then what causes home prices to start coming back down? What causes sort of a recession within the housing industry?
Yeah, because that's what everyone's worried about. Like, hey, I'm gonna wait till next year and home prices are gonna come down, then I'm gonna get in this better position. So people were thinking that real estate prices are gonna come down or home values are gonna come down. Historically, there have been two things that kind of drive that. So the first one is inventory. So if you look back at the Great Recession, the mortgage crisis back in '08 and everything, the home values came down a lot. And the thing that drove that, the big one, is inventory. Inventory shot up to like 9 or 10 months back then. So I would say that inventory needs to be above 7 or 8 months for us to be concerned about home values. But right now, they're still in the threes. Crazy low still when you think historical comparison. So I don't really see inventory going up because of what's happening with forbearance. People aren't having to sell their houses if they're furloughed for a month, or even if they get laid off temporarily. The mortgage servicers are allowing 12 months of forbearance or payment deferment. So I don't foresee personally, this is just Austin and I's opinion, we don't see inventory shooting up to 9. So, and then the second one is foreclosures. So the rate we see of foreclosures, I would say if that shoots up and inventory shoots up to 9 months, then I would say that's a strong case that home values are going to come down. But back to what I just said, if people are losing their jobs because of COVID-19, but the servicers are allowing them to do forbearance because of the CARES Act and not pay their mortgage for 12 months, then those people aren't going to get foreclosed on. Technically, the servicers can't foreclose on anybody right now.
Yeah, nobody should be getting foreclosed on. Like if you're about to get foreclosed on, you just file for forbearance. So it's going to be a year, y'all, before foreclosures become an issue, and then you got to look at how long is it going to be before inventory becomes an issue. It's going to be a long time. And so
if it ever does,
if it ever does. So, and there was an article you said you saw today, right? That Houston is projecting actually home values to rise.
Yeah, I saw it on the Houston Chronicle today. I mean, some people think home prices might go up. We've seen multiple offers with our buyers.
A lot of multiple offers. Yeah,
a plug for our 10-day. Our 10-day has gotten some people an offer accepted in this, so remember that. So we don't know. It's speculating right now. I feel like, Austin, to think home values might come down. That's speculative, and we want to stay based on the facts. And the facts is rates are all-time low. And so we kind of worked up something to show, hey, let's be devil's advocate. Let's go worst case scenario. And so I'm gonna share a quick sheet. It's our first time trying this, so give us some grace. But let's pop it up and see if it all works.
Yeah, while you're pulling that up, what we're talking about now is, okay, so we don't think that home values are going to drop.
Correct.
But let's just say that they do. What we do know is that there's going to be a lot of economic stuff going on right now with mortgage rates. There's a lot of help keeping rates low. my personal opinion, no one knows, but my personal opinion is rates are going to rise. Maybe I don't think they're going to skyrocket when we come out of the coronavirus. I think there's going to be a lot of help to help keep them low so that the housing industry can stay healthy, but they're not going to stay where they are. They're going to move up. And so the question that we are presenting to you now with this spreadsheet is, let's say home values drop substantially, but rates go up. Are you in a better position to wait for possible decrease in value, but a probable increase in rate? Or are you better off buying hypothetically at the top of the market if that's what you think this is with the bottom of the market interest rates? So take it away, Jonathan. What do we see?
Yeah, so I went back to '08, and you got to remember 2008 was caused by the mortgage industry. It was caused by the real estate industry that sent our entire economy into a recession. And when that happened, the average home value decreased by 8%. And so I feel like that's a good place to start. And we got to remember, COVID-19 is a health thing. It has nothing to do with real estate. Real estate's actually in a great position if you look at people's equity and everything else. So if we look at our average house, I went with 450,000. So thinking about buying right now, if we look at 8% depreciation, not 8%, but 8% home value coming down, maybe you can buy that house in 2021 for 414,000 because it came down 8%. It's like, oh wow, save some money.
Yeah.
Right. But right now, rates are down in the lows. You know, we have 3 1/8 up here, and Austin and I are just speculating it could go to 4, 4.5, maybe in 2021. We don't know. But at Austin, in 2009, we saw 5, 5.25. I mean, we don't think that'll happen, but so we're looking at that. And so what people want to know is, how does that affect my monthly payment, right? Well, everything's monthly, our car loans, our mortgage payments, you know, our grocery bills. We live in that monthly window. So you might be getting a better deal, but you're going to get a better rate buying now. And so you're going to save $136 a month just on your payment right now. And so,
yeah. And look at that. Look at that, Jonathan. I mean, that's a difference in almost a $30,000 difference almost in your loan size. So you're borrowing right now potentially, and in your worst case scenario, we go through a huge housing regression with home prices. In that scenario, you'd possibly be borrowing $30,000 less and you're paying more. I mean, that's the power of the interest rate, and that's the power of financing right now. But yeah, keep going. What else do we see?
Yeah, so that's the big thing. And so this situation, we're looking at 20% down. So yeah, you're, like you said, you're putting down a little bit less money and you're borrowing a lot less money. But the big thing here is the interest rate and that monthly savings. And then you look at it over 6 years. And I did loan size in 2027. The reason I did that, in Houston, most people buy or sell every 5 or 7 years. You know, no one stays in a house 30 years, especially in Houston. A lot of people move. So I just took 7 years. So say you're going to sell this house in 7 years. The loan size in 2027 on the buying a year later is going to be a little bit lower than the one you bought now. But those monthly savings compounded over 7 years, you still end up almost $2,000 in a better position.
Yeah. So you see how fast that balance is dropping at that lower rate. I mean, that's really powerful. And guys, this is it. This is like, if you've got someone, just to make it really simple, if you're not a numbers person, but you're a great realtor and you want to help someone get off the fence, you just simply tell them that the rate is going to have so much more of a profound impact on the affordability of their home than the cost of the home itself. And if they have questions, show them this video or we can walk them through it. But I think that's huge news for you if you're a realtor, to be able to go, let's stop waiting around. Like, one, we got stuff showing that actually prices are probably going to go up. 2, we know rates are at the bottom. 3, even if prices went down, rates are going to go up. How much we don't know, but it's going to become more expensive as the rate rises.
Yeah, I can say we conservatively put 4.5 in here, and this is worst case, 8%. I mean, if it's 2% or 4%, you're still in a great position. I mean, it's unquestionable.
Better. Yeah. I mean, surely you can't think that this scenario that we're in right now is going to cause a greater impact on home prices than what the housing recession did. It's just not. That's the housing the The last recession was caused because of the financial industry and the housing market. This one is not. Like, the housing market, the real estate industry, the mortgage industry is going to lead the recovery because so many people are sitting on so much equity. No one's going into foreclosure. I mean, and so, yeah, I mean, I think to sum it up, my thing this whole time, y'all, about everything with COVID-19 is no one is going to tell you to make the most important decisions in your life based out of fear.
Mm-hmm.
That's not smart. You don't make your most important decisions in life based out of fear. You make them based off of fact. You let facts and history inform your decision. That's what making a wise decision involves. And so that's what I try to encourage everybody is let's focus on fact, not on hypothesis, not on fear. And man, the data, the history, all of it, if you're planning on buying in the next 12 months, personally, I think you're crazy to sit around and wait.
Personally. Yeah, and I think information is powerful. Being educated is powerful. That's what our clients, our borrowers, everybody's looking for. Is, you know, we're all leaders in the real estate industry, and people are looking up to us. And I think this is a great way to show them some information to make people feel empowered in their decision. Not just, I don't know what I'm doing. It's like, no, here's some data. Here's how it can actually affect you, and then helping people move forward. So, good time catching up, my man.
Hey, brother. I'm ready to be with you in person. I'm tired of
Austin and I haven't office together in a while. We don't know when that's going to happen, but also kudos to all our real estate agents out there. I see y'all, you know, wearing masks, wearing gloves, sanitizing. Y'all are doing open houses, showings. Y'all are out there. Just super proud to be in the real estate industry. Super proud to be in Houston and have awesome colleagues like y'all. So hats off to everybody's doing.
Amen. Amen. And if you're looking for some good news, guys, we are drinking from the fire hose right now with the purchase leads and contracts that are pouring in. And like we said at the beginning of the call, I mean, we're seeing a lot of multi-offer stuff. So, man, it's getting hot because, I mean, all these people, they were just waiting to buy. April is always a big month. And so we're seeing, you know, all this stuff, those waiting, it's starting to come back online. So be patient. It's coming. But also be proactive. Like, if you know people that are renting, man, I would be pounding the heck out of them, because I promise you, every renter I've talked to is saying, this has helped us realize we need more space. So you reach out to your database, find a way to get a mailer into some apartment complexes, people. I mean, people are going to come out of this hungry to buy. They're already hungry to buy. The smart people, I believe, are buying now. And we're seeing a lot of movement in that direction. So there's a lot for you guys to look forward to. I truly believe it. And we're here to help you guys get it done. And when you got a multi-offer situation, or you got someone that's out there ready to buy right now, remember this. It's coming in huge. We've had, how many did we have this week? I think we had
3. Yeah.
We closed one on Monday. We've got several, we had 2 10 days go under contract on Wednesday. We had another one try to go under contract on Thursday. It's wild, y'all. So
powerful tool. So, all right, guys, appreciate y'all. Stay in touch. Let us know if we can help y'all with anything.
Stay safe. Adios.